Welcome to the Kinvestor Report, where we sit down with industry experts to discuss the latest developments in the Canadian small cap sector. I'm your host, Arlen Hansen. Standard disclaimer, no part of this interview shall be taken as investment advice. And as we don't know what stocks we will be talking about, I may or may not own securities of the companies mentioned in this interview. If you find these interviews of value, be sure to join our network, subscribe to our channel, comment on the videos below, and share them with like-minded investors. Today, I'm joined by Nick Hodge, co-owner and publisher of Daily Profit Cycle and Resource Stock Digest, co-author of two best-selling investment books, including Energy Investing for Dummies, which is excellent if you haven't read it. His insights have been shared on news programs, conferences, magazines, and newspapers, and certainly does all the mining conferences around the globe. Always insightful on commodities. Nick Hodge, how you doing today, buddy?
All right, Arlen, I'm doing great. Thanks for having me on your new show.
Awesome. Well, I know that you cover all the commodities in your letter to your subscribers, and you've been in the space for a long time. But today, I think I want to cover the copper story. Lots of recent news out talking about major shortfalls coming, lack of new discoveries, low inventories on the COMEX. So we've got lots to unpack today. And as I mentioned, they're all screaming, there's a shortfall coming, yet copper can't really seem to get some legs. Copper stocks aren't really getting much of a bid unless you're going way up the food chain. What is it that people are not believing about this narrative, do you think, right now?
Oh, I think that the narrative is just on a longer term time frame, right? I think the shortages are set to materialize later in this decade, certainly in the 2030s, right? And then you see some of these shortfalls really get pointed if you look at reports from Goldman Sachs or S&P Global or things like that in like 2035 and 2040, when they say, the demand for copper is going to double to 50 million metric tons a year. And that's a whole lot of copper. It's double than what we consume now. But I think in the short term, what's happening, and yeah, you mentioned the price has been unable to break out. I mean, copper has been pricing in what lots of people are viewing as a coming recession, and not just in the US, but Europe is in a recession officially, Germany. Manufacturing PMIs are contracting in the UK and France, et cetera. And the Chinese reopening from the pandemic has been lackluster. They're already reverting back to lowering interest rates and stimulus, especially on the construction side with the homes, for example. And so in the short term, those are headwinds to not only copper demand, but price. And I think that's why the price has remained subdued below $4. And I've been saying for the past, 6 or 12 months that this is a real good opportunity you're going to have here to position accordingly for what is going to eventually come later in the 2020s and in the 2030s.
Yeah, well, it certainly will turn. Well, I got to say, we got near $4 copper in the middle of a major recession. Right? Where are the legs on this copper going to go when, we start seeing some stimulus back in the States and we start seeing that recovery in China? I think it's going to go quite ridiculous. So when these analysts and these industry, majors are talking about this major shortfall, what is this mostly based on? Is it from demand-driven shortfall, or is it a supply-driven shortfall?
I think there's aspects that come from both sides of that equation, right? I mean, on the demand side, you obviously have the green story or the electrification story, where these electric cars are using 2 to 6 times the amount of copper that a traditional internal combustion car would use. And then it's not just the cars, right? You have the whole grid build out that is needed, the increased transmission, which we're now learning is one of the true bottlenecks or pinch points to deploying more renewables. And then just in general, the other infrastructure components that are necessary, the transformers, the electric charging stations, all that sort of stuff. And so that's what these, the increased demand scenarios are forecast on. And, there's various curves depending on, how much electric vehicles are truly adopted, et cetera. And we've seen timelines pushed out, at least I have, for the past 20 years on, not hitting emissions reduction targets. But nonetheless, it seems in the past couple of years with, all the stimulus and infrastructure bills that have been passed and money that is now being spent, that we're finally at a tipping point getting to ushering in that demand in a very real way. And then on the supply side, as you mentioned in the lead off to this little talk we're having, is one, the existing large copper mines, the Escondidas of the world, the Grasbergs. They're not getting any younger, right? It's, they're going deeper. We're having to spend more to get to it. You see these big companies like Rio Tinto and BHP investing in new sorts of extraction and leaching technologies. And so that's part of the supply situation is declining grades and deeper depths of these old mines, and then a lack of discovery on really big mines. And even some discoveries you've seen recently have been exciting, like Jose Maria or Filo, for example. But then you look at the feasibility studies of even those really exciting mines, and I was looking at Filo's last night in preparation for this talk, and when they come online, it's going to be 140 million pounds of copper a year, when you need well over you're going to be needing well over a billion. And so it's a drop in the bucket, right?
Yeah, one mine doesn't really put a dent in the shortfall that's coming here. Do you think there can be a clean energy transition without copper?
No, I don't think it's entirely replaceable. I mean, you can look for replacements, and in some aspects you can use aluminum, but what else are you going to use? I mean, silver is an even better conductor, but it's 5-6 times the price. Or even more than that on an ounce to pound basis, it's well more. So no, I don't think there's going to be substitution. And then there's going to be recycling. I was reading, recycling might be able to account for some 20% of the production, but
peanuts.
Yeah, exactly right. You're still gonna have to come up with 80% of that new supply that's needed. And so no, I don't think that there's going to be a switch. It's one of those things that it's absolutely needed for the conduction of electricity.
Yeah, well, going back to your comment about they're not meeting their emissions targets, they never will.
Oh, well,
and it's the clean energy transition and the net zero goals really are stimulus for the economy and the agenda, right? To keep the focus and give hope to the American citizen right now, in my opinion, right?
Well, if they were really serious about it, they would have embraced nuclear a long time ago, in my opinion.
Yeah. 100%. And I know that you're a huge uranium bug, and I'd love to bring you back on the show to talk about that as well. But besides like the EVs, what are the other sectors causing increased demand in copper in the clean transition? Is it wind power, solar power, nuclear power plant builds? Like, where else do we see this increased demand on the green side for copper?
I mean, all the things need power, right? But at the end of the day, it's the EVs, it's the wiring for the batteries. It's the charging stations, it's the wind farm, and it's the solar. So I just got some quick stats up here. I'll read. I won't do too much reading, but I did have a couple slides I just wanted to refer to.
You came prepared.
Yeah, man.
I'm honored.
a solar installation needs 5 tons of copper per megawatt, and a wind farm needs nearly 10 tons of copper per megawatt. And so, yeah, all these technologies are needing copper, right? I mean, think about it. We used to burn fossil fuels to turn a turbine or something, right? And now we're producing this, in direct current, and it's all wired in right from the very beginning. And so it's a scale change. It's a paradigm shift in the way electricity is produced and distributed. And distribution is worth mentioning, right? I mean, we're changing the way we do it from centralized distribution to distributed distribution, right? With different and smaller power generation installations, but also battery backups and microgrids and smart grids and all that sort of stuff. And oh, by the way, as you'll hear Rick Rule say all the time, there's still a billion people in this world that would love to be able to flick on and off a light switch when they wake up and go to bed. Yeah,
true story. Where do you think the roadblock to increasing copper production is? And I'll just put this into context. I think the Freeport McMoran CEO did an interview, I want to say six weeks ago, and said copper prices could triple and it would still take them 10 to 12 years to bring a meaningful copper supply online. So where's that gap? Is it financing? Is it permitting? Is it viable projects? Or like, why do you think that timeline is just so long to get more mines online?
Oh, it's permitting 100%. Discoveries are out there. I've been involved in projects that, made it all the way to the permitting decision finish line, right? I'm thinking of projects like that Abacus Mining has, where they have
Yep.
like a 20% carried interest with the big Polish international mining company, KGHM, I think it is. That was a project that cleared all the economic studies, did all their base work, baseline studies, et cetera, applied, and then were denied. This is going back probably 2017, 2018-ish. And they're only now, KGHM is only recently reopened an office there in BC, in British Columbia, to start working with Indigenous folks again to try to get that process started. But that's it, man. I mean, look at Resolution down in Arizona, which has been in permitting for 20 years. Or I always like to say I've been involved in a gold antimony project. I know that's not copper, but that went into production before my daughter is born, and we just had her 7th birthday party. So,
Wow.
these things take a lot, and that's just the permitting side of it, let alone the if that's 7 to 20 years, and then you're thinking what, a year or two for exploration, a couple of years for development, PEA, PFS, FS. I mean, yeah, you're getting into 15 to 20 years to bring a new asset online. Some of that red tape, has to be cut down. These permitting processes need to be streamlined.
So, yeah, I think the stats are, Nick, that it takes an average of 17 years to put a copper mine into production from discovery. That's crazy.
Yeah, it's not just copper. I mean, we see this across the board, right? And then the resource base with different commodities and precious metals. Yeah, it's one of the big things, and that's why it's so interesting to see. And you and I get this because we've been in the industry for a while, and even before I was in resources, I was on the clean tech side of things, like writing about wind and solar back in 2007. And you wonder why, like, they talk out of one side of their mouths over here, like we have to install so many megawatts of clean energy, we have to have these targets, but then over here they're not permitting the things that maybe there's a knowledge disconnect, or they don't realize that all the things that they need to reduce these emissions and build these plants, they have to come out of the ground at some point. And then they even go further, and they put restrictions on who can get the money, at least here in the US, right? It's like all these components have to come from North American Free Trade Agreement countries, or they're not going to qualify for the tax incentives. And then what do? We just go out and start having like honorary countries join the free trade agreement, because there's no way they can meet the supply from Canada, Mexico, the US, Australia, whatever it is, right?
Yeah. Some of the headlines, even I think it was this week, was like talk about the lack of new copper discoveries, right? So we talked about some of these major mines, having to go deeper. Cost of production continues to climb as their grades are getting lower. So it feels like there's been a lot less exploration expenditures from the majors out there to go after new copper discoveries, right? And with the market that we've had, we're seeing less and less juniors being able to raise that capital to do the exploration work they need. So with that being said, we've seen a lot of the majors come into British Columbia over the last couple of years, right? The Freeport with AMark, Boliden did a joint venture with AMark. Tech came into American Eagle, Antofagasta through Pacific Ridge, BHP with Brixton, just to name a few. Now, like, BC is not typically associated with high grade copper, yet like all these big boys are moving into the area. And what do you think that they see in BC that is attractive? Is it the jurisdiction? Is it the infrastructure, the long life assets with gold? What do you think there?
I mean, I think it has a history of mining, and it's a first world country with a relatively stable regime. As much as people may or may not like the current government or administration, there has a history of mining and getting projects done. We'll see. I was just mentioning Abacus's project, and there's another one I'm involved in and own is Cucho Copper, that's got a project that's working through permitting there that has a really nice copper project with exploration upside and significant leverage to the copper price. So there's a lot of good things happening in BC, and there's other jurisdictions that are heating up as well. Another area I'm involved in is like the San Juan province of Argentina, for example. And you've got similar companies, as you mentioned, working their way down in there, right? South 32, Antofagasta, McEwen, for example. And so I think one of the things you wanted to talk about was new jurisdictions, and those are two that are coming on and seeing real dollars and partnerships spent on them in a real way. And you say that there hasn't been as much focus or money spent on exploration, but there has been money spent on consolidation and mergers and acquisitions. So just like from 21 to 2022, I was looking up earlier this morning, copper M&A doubled from 7 to 14 billion. So that was 14 billion in deals last year, and already this year there's been over 20 billion in deals. So going to surpass what it was last year. But to your point, these have all been, larger and known assets, either big fish eating big or medium fish, or big and medium fish getting projects out of sort of like the private equity world. There was a big deal done last month, I think it was, with a Russian oligarch's company listed on the London Stock Exchange. It was like $1 billion deal for a nickel asset and a copper asset in Brazil, where several large automakers, Stellantis and a couple others, I think, each put in 100 million. Glencore was involved, et cetera. So money is being spent, and projects are changing hands, but that's going to have to move downstream to your point, right? There's not a lot of big and medium-sized fish, right? Eventually they're going to have to start eating smaller fish, or JVing at least, to provide the capital funding and letting the smaller companies operate and explore.
Yeah. How do you think the risk of nationalization increases as we kind of chug along this bull market for copper?
Yeah, well, that's actually a better answer to your British Columbia question, right? As governments are, increasingly desperate for tax revenue, one of the easiest ways to get that, especially if you're a resource-rich nation, is to levy higher taxes, or have a higher ownership, or outright nationalize the assets that you have. And I mean, gosh, off the top of my head, I could probably think of several examples just recently, right? Like what Chile has done with lithium, for example, or I mean, look at like Burkina Faso this week and what's going on with the Wagner Group, and what could potentially happen with gold assets there. Or Niger, I think, was also in the news this week for wanting a bigger stake of mining projects. I just saw Mali in the headlines with Barrick trying to renegotiate. A couple of weeks ago, the energy and resources minister in Namibia was saying that they need a higher ownership of new resource projects that go into production. And so the risk is very real, and it's clear and it's present. As that old novel, told us, it's a clear and present danger. And so that's why jurisdiction is ultimately important. And I tend to stick to North America and Chile and Argentina for my investments. Africa is a tough nut to figure out. Like, I haven't gone into Africa for uranium, but I did make a lot of money with Ivanhoe, for example, as they developed their assets. So I'm not in that now, but I'm not really opposed to owning it, although he does have another company that I need to spend some more time with here in the US.
Yeah, well, I find when you start investing in those areas of the world, they'll always have some sort of discount.
Sure.
Right? And until a transaction happens. Like, I worked with Nevsun Resources for 9 years.
Oh yeah, sure.
And the cash flow that was spitting off that thing was ridiculous. And it always traded at a discount to its peers, just because of the perceived political risk until the buyout. Right. So why don't you rattle off some names that you're either own or following closely or talking about in your letter?
Yeah, sure. I mean, I think it's worthwhile to own the whole chain. So, probably smart to own a BHP or a Rio, or a Southern Copper or a Lundin or something like that. But that's probably not what your audience was interested in. So
I like boring. Boring makes me money.
Well, and it pays fairly robust dividends as well. So but yeah, no, I already mentioned Cucho. That's the eponymous project is the Cucho Copper project in British Columbia. Yeah, that's a project that's got like an $831 million NPV at $4.50 copper, and it's currently trading with a $25 million market cap. So lots of upside there. They're in permitting now. One we haven't mentioned, though I did mention San Juan, Argentina, is Aldebaran Resources. This is John Black and Kevin Heather of Regulus fame and Antares Minerals fame, which they sold for 650 million to First Quantum.
What's the symbol? What's the symbol on that one, Nick?
ALDE, ALDE, and
ALDE.
Yeah, Cucho is KC. So ALDE's got some big backers, Aldebaran. I mean, South 32 is involved. I believe they own 9.9%. Route 1 is involved. Sibanye is involved, and they continue to write checks. And it's just a giant resource. It's a 13 billion pound copper, 43 million ounces of silver, and 4 million ounces of gold. And they continue to drill. They're connecting two really big zones right now at depth. And so that's a really interesting project. And then, I lined up a couple. One with a little bit longer timeline is Hannon Metals. This is a company with it's a top 10 landholder in Peru. So, but it's a 30 million market cap company. They've already got tech to take 9%, and they got JOGMEC, which is the Japan Oil, Gas, and Metals National Corporation, to give them $35 million to explore this sedimentary hosted basin. And that should be drilled. That JOGMEC portion of the deal should be drilled later this year. The problem, of course, with Peru is the length to permitting. So
it's Peru. The problem with Peru is it's Peru.
Right. For the rest of their assets, you're probably looking at 2024 late or 2025 for drilling. But it's an interesting style of mineralization. The one project they have is sedimentary hosted, which is like almost like a shale, like they mined in the Kupferschiefer in Poland, for example. And then they've got another like porphyry basin where they've identified something like 7 or 10 porphyries. So I could keep going on small names, but those are all companies I either finance privately or own or recommended in the letter.
That's good. No, I hadn't heard of that second name, so I'll take a look at that. What are some of the management teams that you'll like cut blind checks to? Like who are the guys that you follow really closely in the copper space?
Oh, John Black and Kevin Heather. I don't know if you know those guys at Aldebaran. They're serial successful, right? And I mentioned one asset they sold. They also have Regulus, which is a very large copper asset. I mean, yeah, those guys get our money when they ask for it. The problem is they've also got several large entities willing to give them money, so they might not necessarily always need your capital. Who else in the copper space? I mean, not that I know them personally or anything, but the Lundins operate very high quality businesses, right? I mean,
Ross Beatty.
Absolutely.
Yeah, the Hunter Dickinson group you should be following too.
Yeah,
most likely.
Yeah, no doubt, man. And there's a small group that I've been involved with for years that run multiple companies. They sort of had rare earth companies in the 2010s, and it's a small group of Australians. And Michael Hudson is one of them. He runs Hannon Metals, and then Mark Saxon is another, and he has a company called T2 Metals that has some good looking exploration projects in Arizona, and a small project in Flin Flon in Manitoba that has a small resource on it. And they raised some flow through funds to drill that Canadian project, which will happen here in the next couple of months. And I've written that company 2 or 3 checks, and that's a team I tend to run with. In fact, the sort of third musketeer there was Blair Way, and he's the CEO of Patriot Battery.
Well, speaking of successful management teams, I think I saw Craig Perry talking about $20 copper.
Yeah, that's the Inventa Group, is that right?
Yeah, the Inventa Group. Yeah. Do you believe in the $20 copper story?
So I believe in the certainly the $7 to $10 copper story, like in the next, I don't know, 3 to 5 years.
Yeah.
I don't know about $20 copper. And I also think that things change when prices go up that high, right?
Of course.
We were talking about substitution and recycling and things like that. And so other stuff comes into play when the prices of commodities go up like that. But no, I do think copper prices are going to triple.
Yeah, I don't disagree. And like I said it on my show before, but every bull market has a mania period. And you could get into that period of copper where it does go to $20, in my opinion. Whether it's healthy for the market or not, another question.
Right. So here, I used some other stuff I wrote down. So the Goldman Sachs forecast is to double to an average of $15,000 a ton in 2025, and that's like $7 copper.
Yeah.
It's like a year and a half away.
I think it's extremely viable for sure.
Mhm.
Yeah, I'm just curious to when, like when the copper stocks are actually going to light up and believe this narrative, right? It takes much more of a longer term kind of mentality to be buying some of these copper names, right? And there's not a lot of long-term mining investors out there in the world
Well,
anymore,
yeah,
right?
you definitely got
Everyone,
to be patient.
you got to
Patient
be
asset
patient,
class
right?
too.
And the battery metal names, the lithium names are still giving gains for investors out there. So you just can see so much attention out there to the space that's moving that these other ones that are really set up for strong fundamentals just can't seem to catch the bid.
Yeah, I think copper is it's its own sort of not detractor, I guess, for lack of a better word. And that what I was saying earlier about the global recession, right? And so in that capacity, you were saying, when is it going to be time? When is copper going to deliver returns? Well, you sort of have a little easier timing mechanism than you might with other commodities because of it being Dr. Copper. So you can look more at growth. And, when the US GDP starts to expand again, when European GDP starts to expand again, I think it'll be time until that starts to happen to build and establish your positions. And so you can sort of use that as a timing mechanism.
Well, that's awesome, Nick. Thanks so much for your time and for being here today. Make sure you check out Nick's publication on the daily profit cycle. Follow him on Twitter for more investment insights. And once again, if you enjoyed this interview with Nick and I, be sure to join the Kinvestor Network, subscribe to our channel, comment on our videos below, and share them with like-minded investors. Until next week.
Thanks, Arlen.